if he can train a self-driving platform, a software algorithm to drive as well or better than a human, it's gonna, change transportation dramatically. From everything from do you need a garage or a driveway, to what happens to parking garages and gas stations and the like.
Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the Cashflow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
To do oil, gas, and macro pretty quickly today because we got a bunch of other stuff to cover. But the next time these numbers for 25 oil supply get done, Russia's going to be down from 10 because the Biden administration has just implemented a plan to get tougher on Russian sanctions. And I think the Trump administration is going to continue that. I don't know what to bring the oil production down from 10, but I would say at least 1 million barrels a day, which will buy up some of that surplus. Had Iran down by 2.5, and that looks good based on recent statistics because Chinese refiners have stopped taking as much Iranian oil. So that's actually happening. So if you lost 1 million barrels a day or maybe a little more from Russia, you'd get the oil market back in balance. And WTI is 78 now. Now, the problem with that in terms of counting on it is that if a deal were made to end the war in between Russia and Ukraine, you'd see that oil back and maybe a little more. Similarly, if Iran decided, having lost its position in Syria and mostly lost its position in Lebanon, that they wanted to get sanctions lifted, that would mean more Iranian oil in the export market. And we go back to having, over a 4 million barrel surplus. So it's an unusually wide range of outcomes. I mean, you might be $80 on a consistent basis with sanctions on Russia and sanctions on Iran. And you might be $60 or $55 on a consistent basis. So once again, I think if you own a stock, EOG or Magnolia, that produces oil, is primarily an oil producer, don't sell it, hang in there. I think if you want to add to one of those positions or start a position in a company that's mostly an oil producer, I would just hang back. Exhibit B, same thing on gas. I mean, the cold weather is very good, but the question will be, how much dry gas production will we have? Is 105 a good estimate for next year, or for the year we're in, for 25? I certainly hope so. You can't tell now because with the cold weather all over, they're freeze-offs. So the amount of production reported by plants is around 102. But sooner or later, the field conditions, weather conditions out in West Texas and Oklahoma and whatnot will moderate, and then we'll see how much gas production we have. Power is pretty steady here, up about 1.5 million BCF per day per year. And the Plaquemine Parish LNG project has started taking gas, and a expansion of Corpus Christi has started taking gas. So in recent days, the LNG has been up around that 14.5, which is terrific news. On macro, Musk is now saying maybe the bar should be $1 trillion, not $2 trillion of reduced spending. But the plan is to have one big bill, which will include border, extending the debt limit past the 4 years of Trump's administration, reducing spending because that will be necessary to get that extension done, and making the tax cuts permanent. And that will require every Republican in the House. I doubt if we'll see any Democratic votes for that. And it's reconciliation, so they'll be able to do it with the majority of the senators. But that is a tall, tall task. And after January 20th, Inauguration Day, there'll be plenty of news on that front. And if a significant amount of progress can be made, in other words, if these numbers expenses in 25 were just under $7 trillion and revenues 5. If they could somehow figure out in this process how to take $1 trillion out of spending, that would be terrific, because then our deficit, rather than being just about 2 trillion, would be just about 1 trillion. That means long-term interest rates would come down, all kinds of positive things. But getting that, I mean, think of it, 7 trillion, saving $1 trillion out of 7 trillion. You've got to go out everything. You've got to get something out of defense. You got to get something. I think Social Security is just on autopilot, but you have to get something out of Medicare and Medicaid, which is a combined 1.7 trillion. In the all other category, which is projected here at 1.3 trillion, you got to take 100 billion or 150 billion out of that. Defense, which is, 900 billion, you kind of, it'd be hard to do, but you somehow have to get something there. Interest, you can't do too much about. I mean, the 35 trillion in debt at a 3.5% interest rate, that's $1 trillion. So getting that $1 trillion of savings will be a real challenge. With that, Mike or Jason, anything more on macro?
Well, speaking of Elon moving the goalpost, the numbers came out today on Q1 25 government budget deficit of $711 billion. So they're running closer to a 3 trillion run rate deficit now. Yeah, really large.
Well, they'll try to reclaim with the executive orders and whatever else. They'll try to reclaim a lot of the money that's been spent on these projects, and they'll cure some of the tax credits for renewables and other things. So I think some of that will help, but a $3 trillion budget deficit is, at some point that'll become a capital markets issue and something that will, they'll have to deal with on kind of an emergency basis. I thought a useful thing to do is to cover first healthcare. There's been a JP Morgan conference going on, annual conference, and there's generally a lot of healthcare announcements. For Jason, anything out of the, of unusual import with competitors or whatnot for the companies that are included here, which is basically, the Vertex Pharmaceutical, Lantheus, Harrow, maybe Lilly. And talking with Mike each morning, he said it was kind of unusually quiet for these conferences. Normally, there are more announcements.
Yeah, there's a little bit of news. Typically, there's a lot of M&A announcement at this conference, but really Johnson & Johnson only had the only big deal, buying a $15 billion drug company that specializes in schizophrenia and depression. A handful of other deals in the sub-$1 billion range took place, but yeah, it's pretty quiet. Last year was quiet, and this year has proven to be pretty quiet as well. I guess the hot question that was being asked of all the CEOs at the conference was how will RFK Jr. affect their business? The general attitude was kind of a wait and see and see what changes to regulation are made. But the CEOs of GSK and Sanofi had an interesting response in that they are welcoming the transparency, the potential transparency and effectiveness of vaccines. So kind of leaning into it. As far as the companies on the pages, Moderna and Lilly both pre-announced some of their 2024 numbers, and they weren't great. So in Lilly's case, they slightly underguided what expectations were for the weight loss drug, and the stock was affected, I believe, yesterday by that announcement. And then in Moderna's case, they gave new guidance, revised guidance for this year's sales, and cut it by a third, which is pretty dramatic, from 3 billion to 2 billion. So not looking great there. And they continue to spend a lot on research. Then in Vertex's case, not related to JP Morgan, but they did receive approval of their latest CF treatment. So the the interesting thing about this one is all of the latest versions of this are they're a combination of, in this case, 3 different drugs, 3 different compounds. And in this latest version, there's no royalty burden on any of the compounds. So the margin should go up on this one. And the dosing it's just as effective, and the dosing is once daily rather than twice daily. Let's see. Lantheus did announce an acquisition they're making. This is $350 million upfront for a company that specializes in Alzheimer's diagnostics and cardiovascular imaging. So directly rolls into the business they have. It's a German company. Gives them a much bigger footprint in Europe, where they're kind of underperforming relative to Novartis. And they use the same types of isotopes in their diagnostic tracers. So a lot of overlap between this company and Lantheus. In Harrow's case, I haven't heard any news out of JP Morgan from them, but certainly do your homework. But at this price, it looks like a pretty good value to us. Last quarter, they couldn't meet the demand for their VVI product, which is a extremely high class problem. So their management says they're going to backfill those orders in this quarter. And then some prescription data out of IQVIA shows that one of their other drugs is really accelerating in the sales channel. So they could have a pretty good quarter coming up. And the kicker, I guess I would add, is in a while back, we had talked about how they have a different capital allocation strategy. So one of the spin outs they did was Melt Pharmaceuticals, and they own about 45% of that company still. They released positive pivotal trial results on their sole product. So it's a sublingual anesthetic. So you put a melting tab on your tongue and have your anesthetic that way and it takes effect pretty quickly. It's something that Harrow compounds today. And they'll give up that chunk of revenue for Melt Pharmaceuticals to make this on patent. But they believe with the built-in customer base from compounding that it's a $100 million in sales product out of the gate. So to a company of Harrow size, it moves the needle a bit.
Yeah, that sounds great. Oh, I thought what we should do is focus on turning GPUs into cash flow. Not that NVIDIA doesn't make cash flow producing and selling the GPUs, but assuming that like about half of the GPU capacity is going to go to the hyperscalers, how are they doing? We know they're all increasing their CapEx, producing a free cash flow, getting some complaints from stockholders about that. But how do you think they're doing on the revenue model? Meta has just made a decision that it's not going to try to get revenue from its AI product until it has a billion users. Google looks like they're kind of using some of their AI products to kind of supplement their research to try to fend off the possibility of having people starting to do AI searches. There's an article in the paper this morning on Amazon and Alexa, and they just seem to be having a lot of trouble introducing AI into Alexa and having it be something they're comfortable with. Apple's taken forever on trying to upgrade Siri, and OpenAI is out there, grinding through cash with a fair amount of litigation exposure. And Microsoft, presumably, if they're not selling that many copilots, they can at least integrate it with the rest of their system and at least raise revenue that way. Now that is a very naive view of all that. Mike, where are the nuances? Where's the opportunity? I mean, I don't see any negative for NVIDIA as a producer of GPUs, but where do you see people gaining ground or losing ground or amongst the hyperscalers?
This is a big nut to crack. The most recent gaining ground would probably be the three major hyperscalers, because from what we can tell, their fingerprints are all over this AI diffusion regulation. It essentially has created it so that those three companies are preferential for setting up data centers throughout the world and then controlling who has access to GPUs. I think things are probably going to change with the new administration. Not necessarily, it's not definitely going to be more permissive to get GPUs into China, but we can't expect that things are probably going to change. Big picture on revenue, for setting up a hyperscaler, you're dependent on end users to utilize those GPUs to actually generate revenue somewhere in the stack. And I think it'd be good to talk about the two companies that you mentioned, Microsoft and Meta, because they both have two relatively different approaches to generating revenue. In the case of Meta's a consumer product, advertising based. And as you mentioned, they are giving away access to the model for free. And historically, they haven't monetized anything until there's at least 1 billion users. And I think in the case of WhatsApp, they're well beyond 1 billion users, and I don't think they've really even monetized much of that. So the point is if they're, in the case of Meta, they're in a good enough cash flow position that they can afford to get the usage on the platform. Yes, it costs them some now, but as they get kind of these bleeding edge users comfortable with using it, they're learning more about their customers. They're going to be better able to target them with advertisements on Instagram and Facebook. The future may not be to advertise directly into the Meta chatbot, but we do know the cost of serving that chatbot will go down over time. The cost decline curve for inference it's significant to the point where you're talking what you used to spend a year ago could be 1/10 of that today, and we expect that to continue. So yes, there's a lot of upfront costs, but there's a lot of benefits to scale because they have 3 billion users and they have as much reach, as much opportunity as anyone to advertise. Microsoft is a totally different story. Microsoft is services enterprises, and they're frankly a monopoly. So the easiest way for them to monetize this is to just roll it into their existing Office 365 subscription and raise the price. So kind of forcing customers to take it in a way. And we know they are raising prices pretty substantially next year, and they are giving some level of free service on this on their AI Copilot. You still have to pay more to have more access. So I think for a lot of these companies, they're in pretty good positions to generate money from end users. I think when we're looking at the products that are available for enterprises and consumers a year from now, they're going to be dramatically better than what we're looking at today. And what we have today is 10 times better than what we were looking at a year ago. So the improvement curve is very fast, which is why a lot of these companies are happy to burn a lot of cash now in hopes of future profits.
Yeah, in Microsoft's case, I know I had said that I was a little disappointed with how monetization of Copilot was going, but since then they've come out and said that it's been the fastest growing product line in the company's history, and they're at about a $10 billion run rate there.
Yeah, and they have scale, right? Mm-hmm. Almost every enterprise in the world is a customer.
Wow. Jason, if you had to pick a stock market winner out of all this, and we leave NVIDIA aside, we know that Amazon and Google are going to try to have alternatives to buying GPUs from, having all their CapEx go into GPUs from NVIDIA, and they may succeed or not succeed on that effort. But if it's just a matter of turning the money spent with NVIDIA or with GPUs and with all the other data center products, if you had to pick a winner between hyperscalers plus Apple, and I didn't mention Oracle before, but that would be Oracle, Google, Amazon, Microsoft, and Apple. We're at this point sitting in January and trying to predict how it's going to look in January of 26. Who do you think, or do you think they'll all kind of like a high tide floats all boats? How does it look to you?
I agree. It's probably going to be a high tide floats all boats situation, but of those companies, I do like Microsoft's position as they are the enterprise, provider. Their customer base is a vast majority of large businesses. And as we talk about the AI tools making people more productive, office workers more productive, this is going to, they're in the prime position to be the supplier of that productivity gain through AI. You didn't give me Meta as an option, but I really like their position. And what I like about that is their model, they sell ads, and the way they learn about you as a customer or user is you post things occasionally, but most of the knowledge they gain about you is more passive, where you're looking at things and then you come across something you like and you might actually hit the like button, or you hover on it and look at a video for, a few seconds or something, and it notices. Now you're going to start interacting with a chatbot through their service. And this is more like the data that Google captures, where there's intent. So they're going to have actual intent data on their users, plus kind of what their interests are from the passive realization. And I think that'll be a pretty powerful advertising platform for them.
What does Apple have to do to get a refresh cycle? I mean, it didn't work on the 16. Do they need to have Siri be an agent or the lead agent, or what needs to happen at Apple to everyone really want to go and replace whatever they have in their pocket with a new iPhone?
You've heard Jason and I say this a few times before, that when artificial intelligence works, we just call it software. And right now, Apple, their software has been pretty bad. And you can look at the new Apple Intelligence stuff, and it was a lot of show, but not a lot of go. So I think that, yes, they probably could turn it around. They've certainly done a phenomenal job with hardware, semiconductors in particular, their design of the Apple chips, both for the laptops and for the phones. They've really improved on that, but they've lost their way in software. And there's nothing more glaringly obvious than the Apple Intelligence features.
If they do turn it around and Siri isn't a really full-featured AI agent, that's going to have that would have to have a huge impact. Yeah, I'm waiting for that.
Yeah, coming from someone who admitted to switching to a Samsung.
I haven't done it yet.
Oh, I thought I actually made the move.
He's indicated intent, and now Instagram serving him advertisements, probably.
Right. Yeah. Page two, Salesforce has gotten a lot of attention because their claim is their competition is the Microsoft Office product, and they could beat it. What has been a very aggressive CEO in making claims, and generally an aggressive kind of eat what you kill kind of Salesforce. Can they take market share from Microsoft by just being quicker or having better AI products?
Maybe. My thought is, Mark Benioff's a pretty incredible CEO and a very good salesperson, and he's following his own playbook. He wrote a book on sales and organization management, and the way that he's going after Microsoft and creating them as the punching bag for his sales approach. It's a good sales approach. I don't know that he's turning accounts over from Microsoft to Salesforce. I actually think at least up until recently, the last few years, people have been shifting off of Salesforce to Microsoft Dynamics CRM. So the true story, I think, is a little bit more, maybe not quite as good. But I think what Benny Hoff gets right is that if this is a technology paradigm shift, it's an opportunity for them to take share. Right now, they're leading with this AI agents thing. That's the first baby step. And really what he needs to convince his customers of is that Salesforce is a platform that future iterations of this technology is going to be, they're in the right place to be ahead. And I don't think anybody knows yet. And if you're CIO or CTO at a Fortune 500 company, I'd be hard pressed for anybody to be that confident that Salesforce or Microsoft, for that matter, is the right choice to go with for any of this stuff. We're very early in the game. So I think most of these people are spending time with all these companies in order to kind of seek out where are they going to have a little edge over the rest of the competition.
Okay, let's take a quick break for a message from Oakcliff Sailing.
Hi, I'm Dawn Riley. I'm currently at Oakcliff Sailing in Oyster Bay, New York, but I and my friends are coming on the road to areas around the country, including Detroit, Chicago, New Orleans, San Francisco, San Diego, Hampton Roads, Virginia, Annapolis, and any place else that wants to have us stop in. What is this tour? It's collaboration, which means every single club, every single parent, every single athlete is invited and encouraged to show up. Oakcliff is providing the facilitation and the record keeping. So the collaboration comes from your thoughts, our thoughts, things that we've learned in previous events, and things that we will take forward. And everybody who participates and signs up will get the collective knowledge that athletes want to go sailing. They know that they have great potential, but they don't always have the tools and the information to figure out how to make a plan. So it's basically a self-help organization session for these sailors, from a high schooler who wants to get to college, a sailor who's a teenager that wants to go to the Olympics, a semi-retired person who maybe wants to do the Vendée Globe. And we will help them get the tools and make the map for them to move forward. There's already some things in place on our website called the Olympic Helix, so people can look at that. I'll just have a copy here. Look at that in advance, but that will be one step of it. It's not just for the Olympic athletes, even though that's probably the one that gets the most attention and is also struggling the most because, let's face it, we haven't been that organized in the Olympic pathways for quite a while. If you're a young sailor, often your funding source is your parents. But what happens when you're out on your own? How can you do a campaign for the Olympics and still hold down a job? How can you go to school and still make professional sailing or an Olympic campaign a goal? What are the tools? That's what we will be talking about with the funders, and they can help to coach their younger sailors. But it's also an opportunity to talk to people who are out there getting sponsorship, or sponsors or foundations. How do you organize a foundation for your club? What are the basic rules and resources that you can sort out to make sure that you raise money and you stay within the law? This is anybody from race committee to club managers to optee parents to people that want to host an event, or people that are in charge of making sure that all of the bits and pieces go together. So it's simple things like, do we provide box lunches? Do we have make your own? Or do we have them bring their own? Our club is great at match racing, but we don't want to have team racing. So we will never do any team racing because in Oyster Bay, Sewanee does that. In terms of junior sailing, Oakcliff doesn't do any junior sailing because that is the Waterfront Center, which is a community sailing program, or a couple of clubs around that have the junior sailing programs. So how do we collaborate together as organizers to structure our lake, our sound, our bay, our area, so that we are all working together, not stepping on toes? And it's shocking how many times we'll sit in a room with a bunch of smart people and somebody will say, well, we struggle with such and such. And somebody else says, we love doing that. And you've just got a match made in heaven. So again, celebration, collaboration, open to everybody. Oakcliff is the facilitator. We're coming in to bring a little bit of the fun, and then we are also the record keepers. So we are collecting the information, and we have hundreds of different ideas and things that we're learning as we go along the road, and we will then share those back to the different regions. We really, really, really want this to be region-wide, neutral. We are Switzerland. We are not trying to take over. We are not trying to tell anybody what to do. We're just trying to share the smart things that everybody else in the country already is doing, but maybe their neighbors don't know. I hope to see you soon. Oh my God, I forgot about the celebration part. In each area, we're hoping to have a party either before or after. And so far, it turns out that in Detroit, it's a Halfway to Mackinac party. In Chicago, it's the Pink Pony party. So I don't think Oakcliff has to help you guys in partying and celebrating, but it's an idea that we all get together. We're super psyched, energized, and ready to take over 2025. See you soon.
And now back to the show.
We're almost out of time, Jason. We have to get your commentary. You've been talking about these hyperscalers, how Tesla and XAI are doing in Memphis, and the latest thing that they talk about adding 100,000 GPUs. And I think at list price that's $30 or $40 billion of investment. So it seems way overstated. But I can't imagine XAI, even if they do very well, competing and displacing OpenAI, which I think is part of the roles as Musk envisions XAI. If they do that, they would have to make a huge amount of cash return or revenue from autonomous driving. I know you're a bull on that, so I'll give you the last couple of minutes on any updates in that area.
I guess the only real update I have is it appears that Elon started recruiting for his Everything app. He's talked about it for a long time, and that was the idea behind renaming Twitter into X. He's made some indications that they're going to start building that. I have no doubt it's going to be an AI first product and go after the open AIs and potentially Meta and payments platforms. So he's going down that road, but I think the bigger story has to be the robotics and self-driving cars. We've talked about will there be a revenue payoff for all this AI spend? And he has to process a tremendous amount of video collected from all the Teslas driving around. It's a huge data set, and that's why you need so many GPUs to process it. And if he can train a self-driving platform, a software algorithm to drive as well or better than a human, he's going to realize a tremendous amount of sales from that. So I think that's where the real payoff is. It's going to, change transportation dramatically when cars are able to drive themselves. And not just transportation, but, infrastructure. And from everything from do you need a garage or a driveway, to what happens to parking garages and gas stations and the like. So huge impact.
Anything else to add, Mike?
Well, they're going to rebuild the Palisades. Trump's also talked about doing 10 new cities in the country. So these technological developments may influence the design of some of these, the way that we rebuild. And that could be kind of cool.
Good. Well, we're through our 30 minutes. We'll have more on this, how do people make revenue from all this data center development. I guess I'd say that there's enough going on so that the sentiment that if you're a hyperscaler, you cannot stint now on your CapEx. The risk of being left behind is bigger than the risk of overbuilding. But we'll continue with this discussion next Wednesday. In the meantime, everyone be well and stay healthy, and we'll be here same time on Wednesday next week. Take care.
The views expressed on this podcast are the hosts alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.